If you're married, or you've recently lost a spouse, and you're making sense of Social Security, this is for you. You've probably wondered what thousands of married and widowed people wonder at 2 in the morning. When a spouse passes, do you keep both Social Security checks, and does SSA set it up automatically? This is one of the most misunderstood rules in the system, not because you missed something obvious. The rules genuinely sound alike and aren't. And people who guessed wrong were left short for months. Today we walk through 5 things clearly, using what the SSA's own official guidance actually says. By the end, you'll know whether you get 1 check or 2. And whether you have to apply separately, you'll know how to verify your own record at ssa.gov. So you're never left guessing at 2A. That big answer is item number 1, and a viewer publicly corrected the last video about it. Quick context first. This video is for you, retirees and people approaching retirement, especially married couples, and widows and widowers working through Social Security and Medicare. The goal is simple: help you understand a few rules that are genuinely easy to misread, so you can avoid the common mistakes that end up costing people real money over time. Everything here comes from publicly available official information, the Social Security Administration, at ssa.gov, the Centers for Medicare and Medicaid Services at Medicare, GovS, and AARP. And I'll name each source as we go through each of the 5 points covered today. This is educational content only, not personalized financial, tax, or legal advice. And nothing here is a promise that you'll receive any specific dollar amount ever. Everyone's situation is different. So before any major decision, talk to a licensed professional. Stick around, there is a brand new 2026 rule near the end that actually works. I'm not here to read credentials, I'm here because too many careful people have lost real income to rules nobody explained plainly when it mattered. Everything here is tied to an official source. These rules change almost every year. Subscribing is how you hear about changes before a deadline. Before we go any further into this, be honest with yourself for just 1 second. Did you assume you'd receive both Social Security checks if your spouse passed away? Tell me in the comments per Nationwide's 2025 Social Security survey. Nearly a third of adults didn't even know that a spousal benefit exists at all. You are not alone in this. Number 5, your Medicare Advantage OTC allowance, and the new 2026 notification rule. If you're enrolled in a Medicare Advantage plan, some, not all, include an OTC allowance, a set amount loaded onto a card for vitamins, pain relievers, dental care, and first aid supplies. Per KFF's 2026 analysis of CMS data, only about 66% of individual Medicare Advantage plans even offer this benefit in 2026, down from around 85% just 2 years before that. So the first step isn't about spending, it's verifying whether your plan actually offers it. Here's the part the competitor missed, and it's genuinely new starting this year. CMS now requires your plan to notify you of any unused supplemental benefits, including OTC, between June 30 and July 31. So watch your mail and your email during that specific window. Pause and write those dates down, June 30 to July 31. Your plan must send that unused benefit notice. To check your balance anytime, log into your plan's member portal or go to Medicare.gov directly. No phone call is required to access anything. Just verify what your own plan includes. Number 3, the IRMA AA surcharge on your Medicare premium, and the form that fixes it. This blindsides retirees who were higher earners, and most of them never know they can challenge it. If your income was above certain thresholds, Medicare adds a surcharge on top of your Part B premium. And per CMS, the 2026 standard, Part B is $202.90 per month. IRMA AA adds on top of that. Pause and write that down, $202.90 is the 2026 standard rate. And IRMA AA is on top. Per CMS, the surcharge kicks in above $109. Null for a single filer, or 200 a tent. 000 for a married couple. Based on your 2024 tax return, Medicare uses a 2-year look-back to set your premium. If you retired recently and your income dropped, you could be paying based on income you no longer have. Income from a year when you were still working full-time, that doesn't reflect your situation now. The fix is a specific form, Form SSA 44, the Life-Changing Event Appeal. Write that down. Qualifying events include retirement, reduced work hours, divorce, or the death of a spouse. You file it with documentation of your current income. SSA reviews and may reduce the surcharge. No guarantee every case is evaluated individually, but SSA confirms this process exists. And most people who qualify have simply never heard of it. It is underused, not unavailable. Form SSA 44 is free. Downloadable at SSA. Gov no agent. No third party. No cost. Let me tell you about Carol, and I want to be upfront, she is an illustrative composite, built from real situations people have described in detail, not one specific named individual. Carol is 66, a retired bookkeeper from outside Columbus, Ohio, and she represents this audience. When her husband Dale passed, she had been budgeting carefully around both monthly Social Security checks. She was certain the survivor benefit would just appear. Someone told her she'd get a form to sign. Weeks turned into months. No form arrived. No check changed. And nothing happened on its own. When Carol finally reached Social Security, she learned 2 things that changed everything. And those 2 things are exactly what we are covering for you right now in detail. Number 4, the Social Security Fairness Act and the full repeal of WEP and GPO. If you spent part of your career in a job with its own pension that didn't pay into Social Security, teaching, public safety, some state or local government work, this may apply directly to you. The Social Security Fairness Act, signed in January 2025, repealed 2 rules called WEP and GPO that had for decades reduced Social Security benefits for those workers retroactive to January 2024. Per the Social Security Administration's Fairness Act page at SSA.gov. By July 2025, they had sent more than 1 million payments, totaling about $17 billion to eligible recipients nationwide. The average one-time retroactive payment reported in early 2025 was approximately $6. That is the SSA reported average across a large group. Not a figure any individual is promised. The action is simple and free. Log into your My Social Security account at SSA.gov and confirm whether your record shows a benefit adjustment under the Social Security Fairness Act already. Teachers, firefighters, public sector employees, did your benefit get corrected? Tell me below. Number 2, how survivor benefits actually work, and the part nobody ever explains clearly. A survivor benefit is what a widow or widower may receive after a spouse passes away, and per the Social Security Administration, it can be as much as 100% of the deceased spouse's benefit. You can start survivor benefits as early as age 60, but claiming that early permanently reduces the amount. At age treads, survivor benefits begin around 71, 5% of the full amount, per SSA guidance on SSA.gov, and they build toward 100% as you approach your survivor full retirement age. A separate number, that survivor full retirement age is actually a few months earlier than your regular retirement age. So if your own full retirement age is 67, your survivor FRA might be 66 and 10 months per SSA. Now, is it automatic when a spouse dies? That is exactly where Carol's situation becomes yours. Whether it's automatic depends entirely on your specific situation, and you should never assume if you were already receiving a spousal benefit on your spouse's record and you've passed your survivor full retirement age. SSA may handle the conversion without a separate application. But if you were receiving only your own retirement benefit, you generally have to apply separately, typically by phone or in person, because survivor claims cannot be fully started online. Don't assume it was handled. Verify your status at SSA, Gov, or contact Social Security directly. One more thing, Social Security will never cold call you to offer a larger benefit payment. If someone phones claiming money is waiting for you, that is a scam signal, not a benefit notice. Number 1. The answer to the question we opened with the one a viewer corrected publicly. SSA pays you the larger of the two benefits, your own or the amount you're due on your spouse's record. Never both. Never the sum of two checks. The larger one replaces the smaller. That's it. A spousal benefit while your spouse is alive can be up to 50% of their full retirement age benefit, but only if that's larger than your own. And only once the higher earner is already collecting. A survivor benefit after they pass can reach up to 100% of what they received, not 50%. 100. Larger. Not both. Larger. That's why Carol's check didn't double when Dale passed. The bigger replaced the smaller, and she had to apply. Because it wasn't automatic for her situation. The spousal top-up, while both spouses are alive, is also a separate claim that people assume was filed automatically the first time they applied, and per SSA's own guidance, it was not. SSA does not compare records and send the higher amount without being specifically asked to. Here is the part most worth understanding if you are widowed and still under age 70. A widow can take a reduced survivor benefit at 60. Collect income. Let their own benefit grow. Per SSA, it grows roughly 8% per year, past full retirement age. Then, at 70, take the larger. What you need is your actual numbers from SSA. Gov. Not a guess. Before making any decision. Here's the full picture. 5. Check whether your Medicare Advantage plan includes an OTC allowance. And watch for the June 30 to July 31 unused benefit notice from your plan this year. 4. If you worked in a pension-covered job that didn't pay into Social Security. Log into SSA. Gov. And confirm whether your record was adjusted under the Social Security Fairness Act. 3. If your income dropped since the year Medicare is using to set your premium, form SSA 4 at .sac. .gov is how you appeal an IRMAA surcharge after retirement or another life-changing event. 2 survivor benefits can reach 100%, but whether you must apply depends on your situation. So verify directly with SSA and never assume the conversion was handled on your behalf. 1 SSA pays you the larger of your own or your spouse's benefit, never both. Never the sum. That rule changes everything about how you think about timing and when you decide to file. 3 things to do right now. 1. Open a free My Social Security account at ssa.gov and look at your retirement estimate alongside your potential survivor benefit. Verify. Don't guess. 2. If any of what we covered today touches your situation, speak to a licensed professional or a free SHIP counselor trained for Social Security and Medicare questions. Find one at shiphelp.org. 3. If you assume the system sorted this out for you, this is your moment to actually check. The people who get this right are simply the ones who took the time to look at their own numbers. If you know a widow, a widower, or a couple who has never had this explained plainly, send them this video. It could save them the months of confusion that Carol went through. If the spousal versus survivor segment still feels unclear, scrub back and watch that part again. Next time, the exact survivor benefit claim. Step by step what to bring, what to say, what to watch.